According to TREP, the real estate research firm, approximately $2 trillion of commercial real estate loans will mature in the United States within the next few years. To make matters worse, many of these loans are underwater, the value of the underlying real estate being less than the loan itself. Unlike the residential market, as it relates to commercial loans, many argue that we aren't through the worst of it. Let's take a closer look at an individual example. Building A was acquired in 2006 using debt and equity. The red bar represents the building's present-day value. The refinance bar represents the new capital structure that will be required when the loan matures. You will note that the original equity is gone and that the value of the real estate today is below the value of the original loan. There are 3 reasons why we believe investors should focus on the debt and not the equity. Reason number 1. The value of Building A is not fixed. It could still go down. And what's the first thing that vanishes if that happens? With $2 trillion of loans maturing, there's still a lot of downward pressure on valuations. There's a great deal more risk associated with equity than most managers would like you to believe. Reason number 2. There's a lot less competition on the debt side of the ledger as there is on the equity side of the ledger, as the majority of real estate fund managers are chasing the equity. Reason number 3. Preqin's most recent recorded annual average return on RE funds is 13.4%. If it's possible to achieve high-yield returns with debt, why would you invest in equity? You're not being rewarded for the risk you are taking. Based on the massive cliff of maturing underwater loans and limited competition for alternative real estate lending, there's considerable opportunity to generate high-yield returns by originating real estate loans. And the primary advantage over investing in opportunistic equity real estate funds is that high-yield loans represent more mitigated risk and provide immediate and consistent yield. Learn how. Info@bloomfieldcapital.com.